Okay, good afternoon friends. The topic for discussion today is Fibonacci series and trading levels. Many a times we get to know that people are talking about what is the retracement level or what is the fib level. So we need to understand what is the importance of such levels and why it is important. In trading, I always remark to people, in trading you have to follow what the crowd is following. Do you agree or not? If 10 people say that a stock should price at 100 and you are alone, then you have to see what the crowd is saying. At times, people say, the reversal happen. If the crowd is so correct all the time, how does the reversal happen? Reversals happen because there is some smart guy who has deep pockets and he knows the value of everything. This I have covered in the previous YouTube sessions, but today I will only concentrate on the fib levels. Okay, so why it is important, why we need to know is because everybody is following it. So in technical analysis, when the crowd is following some level, that level becomes important and we need to know. And this is the same concept behind support and resistance. Support is a level where buying comes in. That level may be any arbitrary level, that may have no significance. But the major crowd, if that crowd is buying at that level, you cannot be a seller at that level. Because if you short sell, then you are in big trouble. The crowd has no mind. It's a mania. Mr. Aju, you're not able to hear me? Please log out and log in again, guys. This is the best I can do. Otherwise, I'll share the recording later. Okay, let's not disturb the whole group here. Okay, so my point is we need to know what the crowd is doing. So if there is some level which we say resistance level, what is the psychology behind the resistance level? It is a level where majority of the market starts selling, right? So if somebody has to sell, people generally wait for that resistance level because they know from this level the markets are going to reverse. So that is why it becomes a self-serving philosophy. Because the market participants or the crowd believes in it, it becomes true. So we need to understand what are Fibonacci series and trading levels. So you get the idea behind why we are understanding these levels. Okay, I guess this much is clear. So moving forward, before any discussions, I always give you a disclaimer, that trading is a risky business and you are aware of the risks inherent to this, which may not be only limited to your loss of capital, but at times a lot of psychological pain it leads to the person. So we have to be aware of that, and we should always trade with the amount we are ready to lose. As a personal advice, when I put on a trade, the first thing that comes to my mind is, if I am wrong, how much am I going to lose, and whether that amount is okay to me or not. So let's suppose I can digest a loss of maybe 2,000 or 5,000 rupees. When I put on a trade, I take it that I have lost that amount. Because of this, my mind is free of all the inhibitions. Then the trading decisions which I take are free from fear. They're in a sound state of mind I take those decisions. So this is about it. You should be aware of the consequences, and always with the worst in your mind you should go ahead, right? All this I've already discussed with my group members, so just refresher for you guys. Coming to the next slide, I guess the slide is also visible. What are Fibonacci numbers? Fibonacci number is a piece of mathematical marvel, you can say. What is a Fibonacci number? In mathematics, Fibonacci numbers is a sequence of numbers wherein any number like 2, 3, 5 is a sum of previous two numbers, right? We all know this. This is the basic mathematics we all get in our school, basic elementary mathematics, right? So what is a sequence? This is 1 plus 1 is 2, 1 plus 2 is 3, then 3 plus 2 is 5, 5 plus 3 8. So what is so special about this series? you would ask why we are understanding this series. Actually, what is special about this series is once you go to the higher levels of this Fibonacci sequence, any number, let's suppose 55, divided by a previous number, the ratio that comes out is a constant ratio. When you move ahead, 89 by 55, 144 by 89, this is a constant ratio. So this is the beauty of this Fibonacci series. Also, any number divided by the number two places before is also a constant. Okay, so this is the beauty of this Fibonacci sequence. And in architecture or in physics, you'll find this number, this ratio everywhere. So you can Google about it. This information is available. So here it is, the Fibonacci numbers. A number divided by the previous number is 1.618. You get it? And the number divided by next higher or on the positive side is 0.618. So 1.618, 1 divided by this number is also a constant. And number divided by 2 places higher is 0.382. So you will notice a very interesting thing here. This is the number 0.618, 0.382, 0.236. These are your fib levels, right? So here from where we are getting the fib levels. So I'm sure many of you would have gone through the theory of this technical analysis, and in that you have you have this Dawes theory, right? And in the Dawes theory, it says that all the 1/8 ratio levels are very important, right? So that also comes up to the same ratio. So from this slide we get, okay, 1.618 is the golden ratio, and you will find it everywhere. So since it is a golden ratio, we have found that it has significance in the trading also, right? Now simply what are we trying to do here? So let me see. I have taken a chart of Yes Bank. Okay, this is the chart of Yes Bank. At any point, let's suppose we are here, right? This future is not known to us. This has not happened. You would agree with me? This has not happened. We don't know what is happening. It is generally said, the right side of the chart is a blind spot. We don't know the future. And what we are trying to do with technical analysis is we are trying to predict based on the previous price movements. Some people say, is it actually possible? Is technical analysis a hoax? I would tell them that technical analysis never tells you, okay, this will be the price level sometimes in the future. Technical analysis will always tell you, okay, this has been the price movement in the past, and the probability of price moving in one direction, is higher. Guys, am I audible? I'm getting many complaints. Quickly, can you just tell me yes, yes? Am I audible? Yes, yes. So majority of the people can hear me. Okay. So people who are having problems, please log out and try to log in again. I'm really sorry. I'll get back to you guys later. I'll put this video on the YouTube, and I'm always available to discuss any technical stuff you want. I love discussing technical analysis. Alright, coming back. So this future, this is not available. What with the technical analysis we are trying to do is, okay, one suggestion is kindly log in through your mobiles. People logging from the web are having trouble. Okay, moving in. So what we are trying to do is, what is the probability of a price moving in a particular direction, right? So what we know is that this level, if we are here, right, if we are here and the price starts moving down, right, so will it go all the way down from the price level where it started, or this particular move is a reversal, wherever the price, whatever it has gained, is negated. This complete price move has negated. Miss Rajni, I'll get back to you separately. I'm sorry, I have very limited time and limited resources. You can watch this video on YouTube. Okay, so this is a reversal, complete reversal, we say. Sorry for the bad handwriting. Okay, and this move, if it stops here and starts moving up again, will you call it a reversal? Do you think the price, that this complete price move has negated? No. What has happened is, at this level, few people thought that this is enough and the price may not be able to move further ahead. So they start booking profit, right? They start booking profit, but there was one person who was observing the market here. If you have seen the video of the market participant on YouTube, which I shared, you will see that there is some people who are waiting here, who have seen the move from here to this level, which is a high level, and now they are regretting that they should have entered at this level to gain the profit. So that market participant, who is a neutral guy, is waiting to enter the markets again. Do you agree with me or not? At any time, the market has three people: buyers, sellers, and people who are neutral, who are waiting for an opportunity. When you see a market moving up, the neutral person is always waiting to enter the market. So neutral person is waiting for entering the market, and somebody at this level is thinking, okay, I have had enough profit, now I want to book my profits, because the market has turned. Maybe it has turned for a few days or 1 month. It is still not sure, because the future is uncertain. So at this level, somebody is waiting to buy again, and this seller is coming and he is selling to this. At this level, when the buyers overcome, the buyer is a buyer, the neutral guy is also a buyer. So they overcome, the market starts moving up. Agreed? This makes sense? Right? This makes sense, guys? Yes? This makes sense, huh? So what is this level? How do I know the market has reversed? That means it will go completely down, or the market is only in a small profit booking mode. I need to know this. Now, how can I know it? I will look for the levels where the market participants are likely to buy. Correct? Those levels can be, some your EMAs, exponential moving averages, or your last resistance levels, which have become the support levels now, because once a resistance is crossed, it becomes a support. Right? Understanding that it is a retracement or a reversal is to plot the fib levels. This is where the fib levels becomes important, right? I'm using this online platform, which is investing.com. Here, if you see, there is a fib retracement option. I'll put the fib at the start of the move, right, and to the tip, very beautifully, right? See, if I was here, the market crossed 23% with a big candle move. This level has no meaning, gone. 38%, gap down. Can you see? Gone. This has again no meaning. But the 50% level, you see the price is jumping from this level. Guys, I need responses on this fact. Can you see? So in fib levels, all these levels which I have plotted, Fibonacci, 23%, 38, 50, 62, 78. Okay, so these all levels are there. Out of these, 23.6 is generally a weak support. Take my word on this. Whenever a price is jumping from 23, like here, it may not cross your earlier barrier. It is a very weak support. 38% good support, 50% best support, and 62% is your golden number, which we have talked. It is the last support level. This is 2/3 of the move. You know, if the prices are not able to hold at this 62% level, straight away go short, because the next level comes to be this. This again, this 78% level has no meaning. Again, you from the zero you will find it. Is it clear? Right now we are having a 50% retracement. If you combine all these candles, you know, let's come to another way of looking at it. Let's suppose this is a daily chart right now. Right now it is a daily chart. If assume this is a 5-minute candle, just assume for the sake of assumption, and you see at this end of the day, you know, this is the end of the day, all these candles will combine and form a daily candle. True? You understand? What will be the candle be like? Open, high, and close. There will be a tail on the upside, but it is not able to close more than 50%. So what we do with this information? It is a bullish candle. Had it been a close below 50%, you know, then we say the most of the up move has negated. Same is the concept here. So the 50% is a very strong support, since it jumped from the 50%, right? Now on the upside, what becomes the resistance level? All these fib levels, 38%, 23%, they all become a resistance level. You have, once you put on a trade at this level, you cannot just leave the trade. You have to every day, because this is a daily time frame. You must have seen in the video also on the trading multiple time frames. Since we are trading a daily time frame, at every day we need to see what candle has formed. So we track it on the daily basis and see, okay, without reaching the 23%, it retraced back with a big candle and again moved up, and then 23% became a resistance, right? Started moving down. This is actually a support at 38% level. You will say, but these candles have gone down. But then immediately these candles have negated the previous candles. So with 38%, good support. Whenever price jumps from a 38% or 50%, most of the times you will see a breakout, which we are saying here. Again, some resistance at 23%. It is a weak resistance, weak support, then jump. Agreed, guys? Yes or no? This is a good piece of information I am giving you today. It will really help you in your trading. Do you agree with me or not? Right. Now, some people, they wait at this level. They try to trade the breakouts, the movement upwards. If you use the Fibonacci, you are having a double benefit of trading this up move and the breakout. At this level, at the zero level, again, the previous peak, it may or may not be a breakout level always. There is a probability of a breakout. So what you can do is you can book half of your profits here. It may so happen that there is a big market player who's waiting for this level to go short again. So the trading is a game of probabilities. There is a probability, yes and no. So what you do is you book half your profits and move your stop loss up. So that way you still have an opportunity to have benefit of this breakout, and you have saved some of your profits. This is how we trade with Fibonacci levels, right? So this particular chart is a Fibonacci retracement, right? Coming back to the presentation, just for the sake of formality, this presentation stuff, I'll just quickly go through Fibonacci ratios. These are the ratios identified. The idea is to go long whenever you see some fib level approaching. But there is a caution from my side also. The Fibonacci levels will give you your direction, right? Once the price is jumping from the 50%, I would say my direction is long. But that does not mean I'll simply enter the trade. No. The entry of the trade for a daily chart will be based on an hourly candle, as again explained in the YouTube video, or you can enter based on the daily candle also, depending on the candlestick analysis. So the fib levels are giving you your direction and possible support levels. Possible, there is a probability. Always remember, there is a probability that you can be wrong. If at 50% level I go long, right? Again a fact I'll give you. At this level, let's suppose I go long and the market starts moving against me. So below what level will I think that I am wrong? My analysis was wrong. Below the 50% retracement, which is the 273 level minus your ATR. What is ATR? ATR is the average true range. That is the level the price can move in a day, which is an average. Any move more than that means there is some fundamental change which you may have not anticipated, but the market participants know about it. So what you do is you just close your trade. It may so happen that your original direction was correct. Don't regret it. You are doing what is the best in your interest. Do you get it? This is what about Fibonacci retracements. Right? Guys, right? Now, yesterday I was holding this and somebody asked me, then what is the correct way of plotting this fib level? This is a very good question. Here if you see, why I should take this, why not I should take this level or this level, what levels? Answer to this is, here if you see there is a double bottom. If you guys have read the technical analysis, there is a continuation pattern, there is a reversal pattern. Double bottoms are generally reversal patterns. They indicate a start of a new trend. The bottoming out has finished here, so it is moving up. So I can take a start at this level. What if I take a start at the down level, maybe here? The beauty of fib levels is you will see that all these levels are still respected. Yes or no? All before your eyes. 50% level respected, 23% level still respected. Can you guys see? So the fib levels do not change, but the correct way is to identify from where the trend started. So you will be more correct. Some response please. Okay, till now anybody has any queries, you please tell me in the messages. I'll unmute you and you can ask your queries. Guys, some response please. Even if you've not been able to understand any particular point, I can repeat. Fib levels to be drawn from the lowest point or bottom of the candle. Varun is asking. Varun, generally, the candle tips or tails, the shadows, they have no meaning because they have been negated. If you come to a lower time frame, you'll see a up move and then immediately a down move. So that particular price movement has negated. But fib levels, you can do it with this also, without this also. Why I am saying this is because if you see here, if I change this from this to this, maybe the levels have not changed. Fib levels will never give you an exact price point, 281.45. Never it happens. All the support resistance levels, there is never a particular price. There is a range. So anyways, if 281.45 is coming as a fib level, I will consider it as 281.45 minus the ATR, which is your average true range, so that I have a zone. Maybe for temporary time period the price may breach and immediately the buying will come up. Somebody who's sitting with good number of stocks, any intraday trader or something, he can move the price below support level. What is interesting to note is whether buying came in or not. So this is more important. Anybody else, guys, any queries? So whosoever has missed the starting, the video will be available on YouTube. You can again check, and if you have any queries, I'm always available. You have my number. So no issues. I love discussing technical analysis, you know. Guys, this much is clear. So I'll give you another extension of this knowledge. No response. Yes, Mayur, thank you for your response. Anybody wants to add into something? You may have a counter view also. You know, I can be wrong. Whatever I've learned, all this you may or may not find in any books particularly. This is based on pure experience that I've gained, experience gained with losing trades mostly. You know, the best teacher is a losing trade. You should always come back and check where you went wrong. I always do it. I have Varun, I have sent everybody invitation personally, so they have my numbers. Sure. Okay, guys. So I think this fib levels is particularly clear. What are the levels and what is a retracement? Difference between a retracement and a reversal. Yes, Mr. Vivek is asking, does Fibonacci work in intraday as well? Another beauty of technical analysis is it is independent of the time frames. Amazing thing, you know, whatever works for your daily time frame, daily charts works in your intraday charts as well, because it is all buying and selling going on. It is all buying and selling going on. You please again check my video on YouTube regarding trading multiple time frames and what significance each time frame has on the other time frame. You know, at 3:15, I'll give you one example. At 3:15, if I'm short on some position, even though your broker will say you square off, let's suppose I'm short on some position at 3:15. What I'm approaching is end of the day. We agree. The daily is positive as per the daily chart, but I'm trading a 5-minute or 10-minute chart. The end of the day has to be positive because daily will govern this. So quickly I will know, okay, where my daily close level might or might not be. So this is how you understand what will happen in the upper time frame. There is a whole universe of time frames. Some people trade 3 minutes, some people trade 25 minutes, some people trade 45 minutes. You won't find these time frames in normal charting softwares, but people do that. The idea is to understand the buying and selling force and which force is overcoming the other. Right? So this is all about the Fibonacci retracements. All right. So the another thing is, now let's suppose I'm coming to that one. Next point, I'm coming to that. Now let's suppose I delete this. Okay. I have this at this level. Let's suppose. Okay. So at this level, let's suppose, and I say I'm short. At this level I go short. So what is the level from which the prices might start moving up again? So what I can do is I can put a reverse Fibonacci, something like this. This is a peak, or let's suppose this is a peak, initial peak. Okay. Now you see, if I zoom in, okay, right, this is something like this. Okay, so if you see, now prices went down, turned up. If I'm short, how do I know that the original up move has started again, or it is still temporary pullback? I'll again check the fib levels on the reverse Fibonacci. You see the prices reversed from what level? 62%. Again a fib level. So down move is intact. I continue in the trade. Again it tested the 0. From this, some reaction came in, because this secondary Fibonacci will have less significance than the original Fibonacci. So you always know what is happening in the market. But this is a good way to understand where the prices are likely to react. Okay, this is one thing. Now we have talked about retracement. Everything was retracement. Now if you ask me, Sunny, from this the level came down here, moved up, and there is a breakout. How likely the price is can move, what is the likelihood of the prices moving up. What I will do is I will put a Fibonacci extension on this time, not a retracement, an extension. So this was my peak. Extensions are on the reverse direction. So initially the 0 was here and we started from here and we put it here. The other time we'll start here and the end at down like this. If you see, start, end. Okay, so if I take it further like this, very particular thing you'll see, very beautiful. The prices started moving up, retraced from what level? 1.618, which is your golden fib level. Agreed? We just talked about it. Where are the intermediate levels? Actually the intermediate levels by default are not open. What we can do is we can go to settings, close not wanted ones, and what are the intermediate levels for fib extensions? Where it is? Okay, it is 138.2 generally. I'll find the levels for you. Okay, so so you will see that somewhere the reaction comes at close to those levels. There is 123 of level also, so you can see the extension levels like that. So is this clear, guys? Some response please. Yes, so these are the levels: 100, 113, 1. Sorry. Yes, please. Yes, so I'll put the extensions also once. 113, 127, right? Let me put, just for the sake of completeness, go here 113 and 1.27. Right. So you see, this is a zone where it is reacting and coming back again. Mostly, this 1.618 is the prime number. This is the number you have to track, and if you are able to get it, exit close to that levels. You don't expect any more up move, right? So what is the response I'm getting from you guys is, Amayu, what do you want me to repeat? I'll take any stock you tell me. Okay, you should suggest a stock, because this is particular case I had found, so it was easy to point out. If there is any particular stock you have in mind, sorry. SDFC. Okay, SDFC I'll take. SDFC, sure. Okay, if you see, till now, just before I move forward, I'll add just one more thing. It is for your own benefit, guys. I had put a fib level here, from somewhere here to somewhere here to here. Yes, and its start should be here. Okay, I had put a fib level. If you see the reaction to any price move close to a fib level, it is not a perfect level. Anyways, okay, if you see a reaction to price move close to a fib level, let's suppose this. Okay, we have a 50% retracement. Now, without looking at any indicators, we have not used any indicators, but many people love using indicators and they put all sorts of indicators on the chart and they get confused. We have not used any indicator. Why? Because indicators are following your price. Main thing is you identify the price move. If I tell you that this is a 50% jump, the price is moved up, try to take a 50% jump. What will be the situation of your favorite indicator at this point? Let's put RSI, or MACD. Everybody, commonly uses. So this is the level, 50% jump. What is your RSI giving you? Sign. Yes, this is the price move from 50% jump. You see the RSI. This is generally what you take as a positive sign to enter the trade. RSI moving above 20, right? And MACD moving positive. So this, once you identify your levels, fib levels or support resistance levels, your indicators will be behaving in the same manner. You don't need indicators most of the times. Let's come to HDFC. Okay, this Mr. Mr. Nalini has requested. First thing, if you want to analyze this chart for swing trades, come to the weekly chart straight away. You know what is happening? Anybody can say the prices are moving up. All the moves are in the up direction. What I'll like to do is I'll put a EMA, moving exponential. And guys, please note one thing: this 20 or 22 EMA is your mean EMA. Always prices are fluctuating across this. So you see prices moving up, down, up, down. So this will trace. The prices took a support from EMA, jumped up. So as per me, this is positive. On the weekly, direction is positive. When you come to the daily, let's put fib levels. Let's see if we can put fib levels. This is the move. I think from here it started. And first you see here, right? First you see here, this some reaction, jump from 23, some reaction moved up, right? When you have a new move, we'll shift our fibs. Now this becomes the level. The price is fluctuating close to what level? 23. Found support close to what levels? 23. I'll put an horizontal line here, right? This I'll delete again, fib. So you see, prices are finding support, right? Everything before you, right? And what is also beautiful is when you move back, this is also the resistance. So your support resistance levels automatically convert to fib levels, and fib levels automatically convert to support resistance levels. Is it clear? Very easy, right? Or one more thing we can do is put here and put down. You know, I will extend it to here. This was your fib level. So the prices, the breakout at this level went up to what level? Initially at 1.13, some reaction, then 1.27 it reversed. So clear, guys? Yes, right? Yes. So the next, I'm getting a request for Reliance. Okay, let's see Reliance. No, Reliance, not infrastructure. Reliance Industries, huh? Okay, let's skip the trend direction part. I'll put the fib levels. So again, this is the top. Where is it finding some reaction? Rakshita, can you please confirm? You can see this, right? Where is it finding some reaction? Where likely till it is likely to go up to what level is previous high, this level, or maybe some reaction at this level. You know, this is becoming a resistance zone, which is a triple resistance zone. So some resistance at this level, but likely to go till previous peak, right? So it is very easy, and believe me, technical analysis has nothing to do with your financial degrees. It is a common sense, and everybody can, you know, have that sense. You can develop that sense of trading. It is all about probabilities. All right. Next, any more stock? Well, Mr. Ravi is asking for Jubilant. Okay, this is the last thing I'll take today, and I hope you guys have learned something. Jubilant Life Sciences. Okay, let's take Life Sciences. Okay. And now one thing is, you will ask me why not take from here or here. This particular move, if you see, is negated. It has prices are retraced till 70%. So I will not consider this as the start of the move. What I will consider as the start of the move is this double bottom. Good point. Put a fib. Where is it jumping from? 38%. My direction is 38% jump is long. Will I enter the trade? No, because it's a big red candle. Let the prices stabilize and play around at this level for few days. For few days. By that time, your indicators will also give you buying signals. Then you go long. But this fib levels are very strong trading levels. Alright, guys, I guess this much is enough. We already have Mr. Nalini, please, if you want to say something, let me know, because the voices are mixing up. Or you can put in the chat, please. Okay, I'm going to unmute you. Okay. Now you speak. Okay, Nalini, please tell me.
I'm saying how to see for intraday charts. You do intraday charts sibling or weekly chart. So for intraday trading.
You want to know how to use this concept in intraday charts?
Yeah.
Yeah. Okay. So let's suppose with the same chart on the daily, I know this has jumped from 38. My direction is positive. Most likely for the next day it is going to be positive. You guys can confirm tomorrow. Jubilant Life Sciences, since it has jumped from a fib level, it is positive. But if I want to trade the intraday chart, I'll come to the hourly chart. If you have seen my YouTube video, I have shared a connection, a relationship between different time frames, which is a multiple of 5. Where it comes from? Every day has 5 trading hours, 5 to 6 trading hours. Every week has 5 trading days, right? So there is a relation of 5. When we have a directional view from a daily chart, we need to trade the hourly chart. If I want to do intraday with a 5-minute chart, let's suppose this is my 5-minute chart. Okay, if I want to have a trade with a 5-minute chart, my direction will come from the 5 into 5 or 6 30-minute chart. For this particular chart, let's suppose it has moved down. I tell you, okay, this has moved down. Somewhere this is the peak I'm catching. The price is moved up from where it reversed again 23. If my view is short because there was a big gap and I want to put on new short trades, where will I put? Close to 23% levels. Good level, and I'm having good profit also, right? This Fibonacci levels are available in all the trading softwares. It is available in Kite also, Mr. Ajub. So right, guys, this is it. I guess this much is clear. Hopefully if there is anything, you can please contact me. I would also request you, this is a personal request, to kindly go to my webpage, and I have released one trading application, iTrade Pro. You can use it for your daily trades. This application is still not completed, is beta tested, but it is very good to screen for your trades. More of it is available on the YouTube video. You can find it. Also, kindly subscribe, with your name and your email ID. It will be easy for me to get back to you. Or if you have anything, you can write to support@moit.in. I'm always available. Okay. Thank you. Now I'm just going to close this session. Thank you.